Hello guys, and welcome to my YouTube channel once again. So in today's video we're going to be looking at jump 50 index, and we are going to be using a very simple strategy, a breakout and retest strategy, to illustrate how you can easily make some very high profit in the market, to find high probability setups that can help you make some good profit in the market. All right, so we're on the weekly time frame right now, and as you can see, the market seems to be bullish based on what we have right now. So, and the market is actually at a previous support zone, which turned resistance, which is turning resistance right now. If you look closely, you will see that there's a rejection level here. Market has been buying from this level, and then the market is actually retesting that level right now. So, but we're not sure what the market is actually going to do at this level. So meanwhile, I'm taking out this because I'm taking out the rectangle. I want to go down to a lower time frame to mark out the zones, which are very important for this particular analysis here. All right, and also looking closely, we'll see we have other zones where the market has been buying from. These zones are very important that you take note of them. It's a very important zone in the market. As you can see, we have several buys from this zone. All right, and I can even see an opportunity here based on what I'm about to show you. If you look at this structure here, we had a breakout from this zone. You can see market has been rejecting this zone. It's buying from this zone, but unfortunately or fortunately, the market was able to break and close below this zone. Then you might be tempted to enter a sell trade. You can see the next candlestick sold, but the next candlestick that bought, because usually we want to see a bullish candlestick closing below this zone here, then we confirm, okay, we can think of some sales. But right now, the bullish candlestick that was formed close above this level, and for that reason, and closing below, we will see a bearish candlestick. The market buys nicely to the upside. So this is a very nice approach, and if you can just be looking out for this kind of setups on the chart, you stand a very high chance of getting highly profitable trade. All right, you want to see a breakout and close above or below depending on the direction of the market. Then you want to see the market creating the opposite candlestick, and it doesn't have to go beyond the zone. All right, then you wait for that particular candlestick on that time frame to close, then you find an entry. Listen, I'm showing you guys right here, you cannot look for this breakout we are having here. You must not look out for it on a lower time frame, because it is formed on a higher time frame, the weekly time frame. If you go to the daily time frame, you will be deceived by what you'll be seeing on the chart. So you have to wait for it, this bearish candlestick, to close on this weekly time frame. Then you can confirm, okay, the market will be buying because it's not able to close below this zone. All right, so for that reason, we have this buys. Market pulled back, came back, continued buying. All right, so if we go down to the daily time frame, let's go to the daily time frame. All right, so on the daily time frame, you can see that we have a structure right here which the market has created. And for those of you who do not still understand the continuation strategy, an example of a continuation strategy is here. You can see the market has been buying impulsively, then started creating lower highs and lower lows. Then we have something like this. You can see that there was a breakout. You can just duplicate this. Sorry, you can just duplicate this. Put your trend line. Let's see. All right, so you can see the breakout, and market pulled back and bought nicely. You can see what the market did. It bought nicely, and our TP is what I say always hit. You can see here. Then in fact the market even gave kind of an inverted and shoulders pattern. You can see the inverse left shoulder, the inverted and the inverse right shoulder. Then the market bought nicely up to this level. All right, so you need to be practicing these things to help you. This breakout and retest which I'm teaching you is something you can just apply it with this continuation strategy to find a high probability trade setup, and also to find a proper entry, because one of the major problems traders have is entry, not just about the strategy but how to actually enter the trade. All right, so and also we can see that there is a structure here the market has been creating. All right, the market was creating some lower highs and lower lows, and we can duplicate this to be here. Let's just see this. We duplicate this to place it right here, and this is the daily time frame. So we have to look at where the market possibly broke out. Let me draw this down here. All right, so and as you can see right here, you can see we have let me mark out this zone. There's a little zone around this level. You can see the rejections here. Let me bring this line to look at this. There is a rejection here. You can see after the market sold nicely to this level, it tried to buy again. It couldn't. It rejected and started selling. Then it tried to buy again. You can see these wicks. They represent a zone right here. So the market was unable to buy above this zone. Although the market sold and consolidated here, then the candlestick was this candlestick broke through this little consolidation here on this daily time frame and closed above this other consolidation here. So you can even trace this maybe to a zone to the far left where the market is respecting because these are the things you need to look out for. You do not trade the breakout and retest blindly. You have to look out for where the market actually broke out as it relates to or is in line with what we have on the far left, historical activities on the chart. Look, as you can see, the market sold it from this same level previously, and now the market also sold again from this same level. Now the bullish candlestick closed above. After it closed above, it was an indication the market would want to buy, but entering a buy at that time would have been risky. That is why if you follow our strategy, we have to wait for the next daily candlestick to close, like it closed bearish here. You can see the next daily candlestick closed bearish and above the zone, not below the zone. That was why the current day's candlestick bought massively. You see it bought massively, and it's up to this level right here. And if you were able to, I didn't see it, I'm just seeing this evening. So if I had found this opportunity, I don't know what's the minimum lot size. Let me see what the profit. I think the minimum lot size is about 0.01. Let me see, is it possible? Yeah, 0.01. Then let's say you enter a trade at this point and you are able to allow your TP to come up to this level. It's about 32 US dollars with the minimum lot size. All right, so imagine opening like 3 positions, you make close to $100 just from this particular pair. All right, or if you have a beta account size, you know how much you possibly make. So now the market is actually at another zone, a zone that looks and appears very strong too. All right, so we have to duplicate this zone, this horizontal rectangle, to mark this zone right here. All right, so as we mark this zone, what we want to see is that the daily candlestick, we want to see it closing above this current candlestick. We want to see it closing above this zone. If it closes above this zone, then we want to see the same thing that happened previously down here. We want the same thing that happened here to happen here, meaning tomorrow's candlestick, we want to see it closing bearish on this zone. If it closes bearish on this zone, then we'll find an entry at that point to enter the trade after tomorrow. Then we'll take some buy up to maybe this level here to make some profit. It's a very simple strategy, guys. It's a very simple approach. All you need to do is just be patient. You just have to be patient for the market to do these things. It's very simple. You can do this on the 4-hourly time frame. You can do this on the daily time frame. You can do this on the 1-hourly time frame. But I mostly like looking for such opportunities on the higher time frame, like the daily time frame and the 4-hourly time frame, because the accuracy is far much higher than what we have on the lower time frames. All right. So even if you go down to the 4-hourly time frame, you will still see setups like this. Like here, you can see this setup here. You can see the market broke out of this zone and retested this zone on the 4-hourly time frame. You can see the bearish candlestick never closed below this zone. So from this point, there was an opportunity for an entry. The market bought nicely up to this level before it sold back and still did not close below this zone. You can see it bought nicely all the way up. So these are the things you have to be looking out for if you are trying to trade breakout and retest. You don't just trade breakout and retest. Meanwhile, the registration for the June mentorship batch is still ongoing. I urge you that you enroll in that mentorship because you will learn a whole lot. Trading resistance and support is very profitable only if you know when to actually enter the trade. You actually understand how it works. It's not just about marking zones and waiting for market to get to a zone. There are so many other little things you have to consider, and you'll be trading profitably. Your losses will be very minimal, but your profits will be very high. All right, so do not waste time. Just click on the link in the description of this video. It takes you to my Telegram channel. From there you will find the information relating to the June mentorship batch. All right, so meanwhile, subscribe to this YouTube channel, like this video, and share your thoughts in the comment section. I will see you guys in my next video. Stay blessed. Peace out.